What up? How's everyone doing? This is my first YouTube video. My name is Zach Carson. If you don't know who I am a day trader in the Forex markets. First found out about it back in 2020 and have recently, found my stride in the trading space. Right now, I'm a 480K funded prop firm trader, and I wanted to start sharing some insight on what it is I exactly do on a day-to-day basis, what my thought process is, how my strategy works, and hopefully give you guys some insight and inspire some other potential traders to get into the market. Today, I wanted to go over my strategy from top to bottom, what I look for every single day, and hopefully you guys can take some information from it and be able to apply it to your own trading. So without further ado, let's get into it. All right, I'm very excited to be sharing this with you guys. I just wanted to start by prefacing, this is what I look for on a day-to-day basis, and I want to be able to break it down hopefully as simply as possible. To put my strategy in a couple of sentences, I'm looking for a trend on the higher time frame, and ultimately what I'm doing is I'm either looking for a pullback or retracement into an area of interest, and then looking for the transition on the lower time frames. Also, if I can align that up with liquidity and sweeps and things like that, that's an added bonus. But my non-negotiables are always structure and where we're at in that. So the time frames that I use, okay, so this is how my chart is set up. So I only look at either the weekly time frame, the daily time frame, the 4-hour time frame, the 2-hour time frame, and the 1-hour time frame. And then the 30 and the 15 minute are what I use to really scale in and get a sniper entry. So what I am, right? So I am a swing trader slash intraday trader. So I'm taking positions that are, either during the New York session or usually the Asian session, and holding those through past the session for sometimes a couple of days, depending on what the setup is. I will occasionally take an intraday trade if the setup is there, and sometimes price plays out a lot quicker, but that's as simply put as what I can say as far as my strategy goes. So just looking at this market, right, it's really important that first and foremost we understand what the trend actually is. Most traders, when they look at this market, actually let me ask you this, what do you think the trend is in this? What the trend is here, right? Most people are going to say, well, we're making higher highs and higher lows, higher highs and higher lows all the way up, right? So technically, we should be in an uptrend right now, right? Not always the case. First and foremost, the way that I look at structure is, right, I don't look at the candlestick wicks, I only look at the bodies. We can start from even over here, right? So we have, this is a higher low, we push to a higher high right here. So we have higher low, higher high. Now this is the new higher low or a short-term low right here, because we never had a 2 candlestick pullback, which we'll get into. And now this is the new higher high. So right here, I'm looking for the candlestick to close below this candlestick. So right here is this candlestick right here. We close below this last candlestick right here. So now this is the break of structure. And now this becomes the new lower high, and we never really got a pullback here. So this is the lower low. So technically anything in this market right here, even though we wicked above, is still in bearish structure right now because we never had anything close above this. So yes, you could say, okay, that's a short-term low. We're making higher highs and higher lows, but we never closed above. So overall, this market is still bearish right here. So this is something that applies to on every single time frame, but the higher time frames are my key ones that I look at the most. That's going to show you where the direction is most likely to go, and it's going to be a lot stronger and more consistent. So what do I consider an actual structure point? So what I was saying here, right, is this is a short-term low, because if we look at this, we only have one bearish candlestick that we had a retracement for. So for me, what I consider an actual structure point is we need to have at least 2 candlesticks of the same either bullish or bearish for it to be a legitimate structure point. And for us to actually break structure, we need to either have, this close below an actual structure point, or we have to have 2 of these short-term lows broken. So either one to me is considered a shift to structure, and we are moving in the opposite direction. Okay. Now there was a couple of moves that happened, in this market particularly that we're looking at in this example. Now that we have the trend and how to identify, where we're at as far as bullish or bearish. So I do this on all time frames. So weekly, right now we are are in bearish structure because this technically now is, well, this was the last lower high right here from what I see. So overall, we're still bearish. We have the daily time frame that is technically, bullish right now, but we just had the 4-hour transition here. So we have two time frames that are in sync out of my higher time frames, the 4-hour, the daily, and the weekly. So the next thing is, right, if you go back to this example or this example, I'm sure some of you guys know what liquidity is, or you may not, but liquidity, plain and simply, is any orders that are above a high or above a low in a market. So you might be saying, well, there's liquidity every single place on the chart. Well, yes, there is liquidity on every single place on the chart, but it really comes down to having it as an added confluence. It's not like our only thing that we look at, right? Because, technically we could say this is liquidity right here. We swept liquidity, but if we enter in this trade, it's going to go right to stop loss, right? So not every single liquidity is a valid confluence for what we're looking for. We'll still need to have the structure and the trend technically in our direction, right? So what we can see here is this is the last lower high right here on this candlestick. When it comes to liquidity, I'm looking at anything above or below the wicks on this entire move. So right here, we can see that we swept above it, right? So what essentially happened is we had price go up, take out all of these stop losses above because people were trying to short this probably from right here. They all got stopped out, and then price just tanks in the other direction here, and it also did over here as well. So this right here is a really solid setup because we had the break of structure on the daily. I'm sure we had it on the 4-hour as well. So we had a shift of structure on the 4-hour right here, or you could say, so short-term low, break of structure, and now we are in bearish on the 4-hour. But technically we didn't break past here quite yet on the daily. So what would be the best as far as this goes would be this right here. So how could we actually enter in on this trade if there even was an entry that was valid? So right here, if we see this liquidity sweep, that's where it catches my eye. So now we're going to scale down to 1 hour or maybe even lower than that. So the 1 hour, still really nothing that's transitioned on this. We go down to maybe the 15-minute, see where we're at. So this was a while ago. Here we go. So on this one, there wasn't really much of transition on the lower time frame. This still could have been a decent entry, but we never had the shift of structure. Ideally, I like to see this. Well, this would be a short-term low, and then this right here would be a short-term low. So technically, we did have those broken, but you could have taken it from right here on that candlestick close. I don't usually like to take this kind of trade just because, a lot of times price will pull back into this area, and it can help me get a tighter entry. But on this, it would have been a solid trade, honestly, and you would have targeted the low probably right here, and it's still a 1 to 2.66 risk to reward overall. But if we go over to this right here, this is more so what I would like to see as an entry. So we see that we already took liquidity above here. Now we're retesting these highs again. So what I'm looking for then is a shift of structure that's very clear, ideally on the 30-minute or the 15-minute. So right here, we do get that. We have the break of structure right here, but we still never really had a pullback into this area up here. No, it really just tanked on us again. So probably would have waited this one out and then, either put my pending order above right here and let price get into it and then let things play out. What I can see as of right now on this is we have this inverse FVG right here that we broke below, we retested. So maybe on the 15-minute, that could have been an entry. Take a look. Oh, why my chart? Here we go. So on the 15-minute, it didn't really give us a clear break of structure, but this is liquidity again right here. This is liquidity right here. Swept above it. Big push to the downside. So actually, now that I look at it, technically this closed above right here on the 15-minute. So this is our new higher low right here. And we did candlestick close below that. So technically, this could have been a setup because we had the liquidity, we had the shift of structure. We're still overall in the higher time frame trend as bearish. So right here, we already had the 15 or the 30-minute inverse fair value gap, and we put our stop loss above at this area here, and we would mark this as our inverse FVG. So ideally, I like to take inverse FVGs more than just a regular FVG. The only difference is on an inverse FVG, you're looking at the leg that pushed up previous to when we broke below it. So this was the last leg right here. So now this is the inverse FVG. If this was the area you were referring to, this is technically an FVG because this is the leg that we pushed to actually break structure. So he could have put it probably right on the midpoint of this, stop loss above. And where would I like to be targeting? I would honestly like to target right here. Probably this low would be the best one that we were at before, and let it play out. And it ended up getting to where we wanted it to. So that is how the strategy works. It also happened over here again. So this could have been our rinse and repeat setup again. So right here, the only difference on the break of structure is we had two short-term lows that we broke below. So if we look at this, this is a short-term low right here. It's not technically structure to me. Short-term low, one candlestick, another short-term low that we closed below right here. So we have the shift to structure on the 15-minute. Overall, again, we're still in bearish structure on the higher time frames that we already looked at from the 4-hour and the weekly and the daily. So now that I have broken structure on these areas here, what I would look for is another area that we're likely to retest into. So go back to the 30-minute, see if we can find a nice area to take this trade from. Don't see much on the 30-minute. We can go down to the 1-hour. So in this case, there really isn't any missing price or anything that we can use as far as setting our pending order. So what I would do then is just find an area that we've tapped into multiple times to get me in the best possible position to be in a good trade. So already I can see this area right here. Now we've rejected from it multiple times right here. So this is the area that I would most likely put my pending order. So I would have put it probably right here on the 15. Stop loss, you can either put it here, or honestly, I might even put it all the way above this entire high, just in case we do sweep liquidity again. And then obviously price, it does what it wants to do for a little while, and then you can target the low again right here. So price obviously ended up going for a lot lower, but we stick to the plan. And you probably could have targeted either or this low, because this is where the last low was before this high up here that we took out. So you put it down here, and that is really it, guys. First of all, to recap, right, it's identifying the trend on the higher time frames. We want to make sure that we know how to identify the trend actually, because think about if you were looking at this market over here, right? Overall, we do look like we're in bullish structure because we're making higher highs and higher lows overall, right? But if we had not known that we actually look at the candlestick bodies for one, and we can identify our short-term lows that we break below and our break of structures, it'd be very difficult to be able to figure out this market. So first and foremost, identifying the trend on the higher time frames. Then we are scaling down to the lower time frames to also find the same thing on the transition. We get down to the 4-hour, break of structure. All of this can be used, break of structure, and then we scale down and down and down all the way to the 15-minute or the 30-minute, and we find our entry. Another thing I forgot to mention is we are also looking for areas of interest. So what is an area of interest? Area of interest is simply an area that we've tapped into at least 3 times and have rejected from it, either on the support side or on the resistance. So in this case, right, we have this area right here, tapped into it once, twice, 3 times, 4 times over here. So we know that this is a strong area of interest on the daily time frame. So we mark this as our area of interest. And this is now another confluence that we know that price is most likely going to reject from this area, and we can look to take it the other way on the bearish side. So with this again, I'm only looking at the candlestick bodies. So I'm not looking at these wicks. I'm marking this wick. No, I'm looking at the candlestick bodies. So see right here that this is the candlestick body. The reason why I do that is because to me, a candlestick is you either have the candlestick wick, which is basically what your friend told you about some kind of story, and we don't know if it's the truth, we don't know if it's not. The candlestick body, that is the truth. That is where the candlestick opened and where the candlestick closed, and the wick, it somewhat tells the story of what happened during that time frame, but it's not necessarily the truth of where the market is actually at and what is support and resistance to me. So that's why I only look at the candlestick bodies, and then the wicks I use for liquidity and just added confluence, right? If we're getting a lot of wicks from an area like a doji or whatnot, then we know that price is most likely gonna reject from this area, and it's just another added confluence to what I'm looking to do. That is, as simply put as what I can make it. Overall, that is 99% of what I look for on every single day. As you can see right now, This is what I have set up going into this next week on GBP NZD. We had this liquidity right here that we swept above, and right now, so we could say this is the lower high, or sorry, the higher low to higher high. We break below, so now this is the lower low. And overall, we are still in bearish structure from this area. So the daily time frame, we are bearish because we never closed above this area. And, oh, sorry, no. So this is bearish right here, and we closed below here. So then this would be the lower high, the lower low, closed above. So now, and then we break below again. So now this is the new lower high, lower low, lower high, lower high, break, higher high. So technically we are in bullish right now, but on the weekly, we are still in bearish structure because this up here is the last lower high that we have not really even closed below or closed above. So we're still in bearish on the weekly. The 4 hour, we're bearish as well. So looking for the same exact thing. If we scale down to the 1 hour, 30-minute, we already basically missed this entry right here because we had short-term low break. So now we're in bearish structure on the 30-minute and the 15-minute. So now we have multiple time frames that are in sync to the bearish, and we have liquidity being swept from this high up here. So very solid setup. I did end up missing this on Thursday, so this technically could have been an entry right here on this missing price area. Looks like it's a missing price on the 1 hour time frame. But I do think that we're going to come back up into this area and retrace, maybe take out liquidity again, play around, and then ultimately tank to the downside. So we'll just see how things play out over the next week. That is what I look for on every single session, every single day in the markets. Hopefully, you guys were able to take something away from that. I know it was a lot. So to kind of recap, what I'm looking for is we're looking for a trend on the higher time frame. We are looking for the same thing, breaks of structure and the trend on every single time frame going down to the 15-minute. To add into that, we're also looking for liquidity sweeps above key highs and key lows, and also using missing price and fair value gaps to be able to get an entry and setting our pending order, putting our stop loss above the high. I may have to do some more videos just on particular things because I know that was a lot on the short-term highs and the short-term lows, how to identify the breaks of structure a bit more. But that was a general overview of an example on GBP NZD. This is what I look for across all my pairs that I look for. I'm going to be posting hopefully a lot more here in the near future and help some other traders on their journey. If you guys enjoyed that, please make sure to give it a thumbs up and subscribe. I'll keep it locked in. Peace.